Today we're gonna focus especially on a market mastery session focused around metals, because as you guys know, I am personally very exposed in metals, in silver, in gold, in palladium, in copper, in metals in general, and in energy. And we had like a insane drop, right? Like, let's speak about the drop here. What was the reason for it, like the real reason for it? And on my Twitter or on my X, whatever you want to call it, I have reposted one or two very interesting things regarding what happened on Thursday and Friday to gold and silver. I mean, as you guys might have seen, silver have dropped over 30%. Gold has dropped over 10% for what I remember. We can check it out quickly. So gold went from 5,600 all the way down to all the way down 16% to 4,600, and then closed at 4.8, so a 12% drop. Silver obviously had the biggest drop of all of them. Silver went from $121 per ounce down to 39%, and then got bought up to 29% to 85, right? So we had insane drops. Copper went from 6.5 down to minus 12%, 8, and now sitting or closed at minus 9% at 5.9. Palladium went also pretty wild from 2000 to currently sitting at 1683, which is a 22 drop. So we had a 20 to 30 to 40% drop in palladium, in copper, in silver, and in gold, right? And now some of the reasons that we need to look into, because most people or the news or whatever will say it's because of the new announcement of a new Fed chair. And second of all, obviously, it's because of the rate increase, or basically the margin increase, better said, in gold and silver, and metals in general, but especially in silver, right? So you need to understand that there's two different markets, okay? There is the real physical silver gold market, because these are real physical commodities, right? Assets. And then there's the paper market where people trade, right? So where people buy options or sell options, or their future contracts or CFD contracts on these assets, right? So that's paper money. And because of the adjustment of margin requirements, which basically means you need higher margin, right, to open new positions, or especially hold new positions, many were liquidated, right? Imagine you have a call option on silver, or you're buying CFD silver, or you have a futures contract on silver, and there's a certain margin requirement, especially when it comes to futures, right? And that's what the CME exchange handles, right? They handle the future contract market mainly. So if they increase the margin requirements, that means many people are getting liquidated, right? That are maybe over leveraged or whatsoever. And it's difficult for new money to come in. And that, combined with the announcement of a new Fed chair that Trump put into position, the market chose to completely dump, right? And now we need to speak about something that has been some theories that have been around, which I find very logical when it comes to that. First one here is from Jess Dario. He said, if you look carefully into the last COMEX report, right, JP Morgan closed its silver short exactly at the very bottom of the price crash, and from there it all started to come back. This isn't coincidence. This is conspiracy theory. This isn't conspiracy theory. This is the proof of the whole Friday crash was planned. And I pretty much agree that this was planned, right? Because there were, like JP Morgan and some other banks had very big sell positions on silver, right? And COMEX announces the margin requirements increase a second or third time in the last couple of weeks. And if you are connected to any broker, any big broker, you might have gotten emails from your brokers the last couple of weeks, where brokers sent out emails saying we need to reduce the leverage on gold and silver, we need to reduce further, we need to reduce, right? So it's a kind of like a risk downplay, but at the same time, it's just manipulating the market. And if the world would be fair, everyone at Comex would sit in prison right now, but it isn't, right? That's just how it is. So it's very interesting to see that some of these banks here, especially JP Morgan and so on, right? They issued big exits of their sell positions to get out at the lowest point silver dropped into, right? So they are securing themselves. Second of all, which is one of the most followed creator from my side, which is VP from No Nonsense Forex, or creator of No Nonsense Forex. I've told you guys many times about him. He posted they want as few of you as possible to have generational money. You know what to do, right? So it is a planned move for sure. It's nothing that happens randomly, and it always comes down to the theory that I try to teach you when it comes to being contrarian, when it comes to being to risk management. And since you guys have seen so many people jumped into silver and into the metals in general over the last couple of days, completely over leveraging, going in at the very top, right? People started to obviously accumulate new positions here in the top range, which is basically this whole range over here, right? And accumulating a lot of positions, which retail always does, and retail always loses. As you guys know, 90% of traders lose 90% of their money in 90 days, right? And that's exactly what happens. The people that came in the last 90 days here on all the top got wrecked heavily, because no one survived if they've entered here in the higher ranges. Now for us, we took a big hit, or for me speaking personally, I took a big hit. Yes, I was up 150,000 US dollars on my open positions, open P&L, and I closed January with 50% P&L, right? So it went from 150 to 50%, so I lost 100% of my gains, but I'm still in profit. And the reason for that is that, as you guys might have understood for now, I've been speaking about gold and silver since more than a year now, right? So my entries, if you speak specifically about gold, you can see them here. My first entry is insanely low. So just for you to understand, so this is my initial open. This was at 1.8k for gold. Highest point we were at 6.8, right? So this was my first open. That was when Russia invaded Ukraine. The day that happened, I started to accumulate gold. And you see another entry here, and you see some profit taking here, and you see another entry here, and then you see another entry here. So even though we crashed, I'm still below the correction level in gold. You can see my gold option call is sitting at 4.3 or 4,340, and we are currently sitting at 4.8. So I'm still doing pretty well. There is another position that I opened, 3x leverage on gold, which now is just above break even. So we slipped into loss quickly, drawdown, got bought up. So on gold, I'm still doing fairly fine, right? And I want to show you guys later my portfolios for full transparency. And then when it comes to gold, when it comes to silver, you can see some of my newest positions are sitting here, right? So just where we dipped into and now back into profit. So I haven't opened any new ones in the last 40% move, and I have some here at 40. I have some here at 35. So I have very low entries, because what you always want to make sure is you want to position yourself before the trend, before retail, before everyone goes in, and that just happened in the last couple of weeks. Now I'm still, and I'm gonna boldly say that I'm still very bullish on metals. And the reason for that is you need to see behind all of the emotion is that what has changed? Nothing has changed. Nothing has changed. The price just has dropped, but the fundamental is still the same. The fundamental theory why I bought gold, silver, why I invest so heavily into it, why I leverage into it, is because supply and demand. It's because we have too little supply and too much demand. But since everything was so overbought and overhyped and so much retail was in there, and some certain big banks had very big open positions and were making very big minus, and on top of that, I got some inside information from some brokers that January, most of the brokers lost money and they were about to go down, right? If this would have continued. So the system and the banks and the big providers and liquidity providers and everyone, obviously, they always win, right? They always win. So with the Comex coming in, right, with Comex adjusting margin requirements, the market just started to shit on everyone, right? And most people lost a lot of money. We lost in metals, or alone in gold and silver, or even just alone in gold, we lost the market volume of whole crypto in one day, right? Just to put that into perspective. The whole money that is investing in crypto got annihilated in one day only in gold and maybe in silver together, but I think only in gold, right? I mean, we can do the math on that, but we don't need to. It's just proving a point, okay? So again, I'm still very bullish, and I think that's a very, 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 very big divergence. And divergences are always important in the market because price has dropped, when you speak in silver terms, at current rates 30%. But the theory and the main assumption of why we bought gold and silver and the metals in the first place is still the same one. Now we just have a very big divergence, which is the price is diverging to its real value. Okay, because over leveraged people got smashed out of the market and the banks wanted to protect themselves. So I am continuously bullish on that, and I will continue to increase my positions, hold my positions, and hold that for the next couple of years. Like, this is not a 1 month, 2 months game plan for me. As you can see, I started to accumulate gold and silver the day Russia invaded Ukraine. That was 2021, if I remember right, or 2022. So that's like 3 years, right? Let me ask ChatGPT here just to make sure. When did Russia invade Ukraine first time? So again, it's definitely more than 2 years now, right? Probably 3 years. First invasion 2024, full scale 2022. We are in 2026, right? So that's 3 years. So since 3 years, I'm in it, right? I mean, obviously, I could have also checked here in the chart. That is wrong. That is on silver. Gold, we have a initial position that came in here in the BC correction level. 2025, no, that's impossible. I know I have even lower entries. Oops. As you can see here, my entry in gold was at 1,800. So that must have been somewhere over here, probably 2023, probably a little bit earlier, 2023. I don't know when it was, but it was 3 years ago, right? So that's very important to understand, and I have no problem holding it for another 2 or 3 years. Now, obviously, the leverage stuff, when it comes to the options and so on, we need to speak about that, okay? But let's quickly speak about the portfolios and then go into a game plan, what we're going to do the next days, because we still have to manage now the positions and make sure to see if certain key levels hold, or if we're going to have a little bit of a continuous drop. And we are not done yet. We don't know that. That will depend a lot on how Monday opened, right? And as you said, some of the brokers reduced temporary leverage. Yes, because they were getting effed, right? Everyone was just winning on these positions, and that would have meant that brokers would have got liquidated, right? And liquidity providers even had problems, right? So again, the system saves itself. CME, the COMEX increases margin requirements, all the leverage positions get smacked, and everyone is back in money. Okay, so it's basically fraud, but it is what it is, guys. So and everyone has to understand that if you are trading or investing, you are against the big guys, right? You are playing against the big guys, and you don't want to play against them. You want to play with them, right? So as you can see, one of my portfolio here on Trading 212 is I still am in profit 30% in my silver position, and that's like a little bit fallable. It's a little bit wrong because I have been selling, buying, moving stuff, so it's not the perfect percentual reflection, but again, I still finished with 50% gain on my portfolio in January so far. I did the calculations yesterday, okay? So I'm still very heavy on semiconductors. You can see I have 2 positions in semiconductors with nearly 40k US. Then copper, palladium, which obviously I got a biggest hit because I recently re-entered. I sold old positions, took some profit, re-entered. So that shows a minus, but I'm still up because it started way lower, right? So I'm still currently very big in exposed in the metals market, as you can see, with currently 134,000 euros. At the top, I was sitting at 184, right, which was an 80% up. So stream leaks. I cannot do anything. I'm not. My internet is fine, so there's nothing much I can do, guys. Sorry. So yeah, at the top I was sitting at 184. Now I'm currently sitting at 134. So we are still in profit, as you can see, 31%. And when it comes to IBKR, which I hold my options and so on, you can see my daily P&L for Friday is minus $30,000. I was at the peak at $50,000 profit, or P&L basically, right? And now it came down to 10,000 unrealized P&L. So as you can see, I have a big position in, which is my largest position, which is crude oil, which is WTI, right? Crude oil, United States Oil Fund here in that sense, okay? And that's basically this position over here that we spoke about last time too, right? Which I even got a lot of messages from you guys, which makes me very happy, where you guys said, oh, I made so much profit on it, I'm so happy, blah, 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 which obviously is very nice. But you can see US oil, we entered, so we entered US oil here at 59. We're currently sitting at 65. I put in a trailing stop loss at 62, which sits below the 50%, just, you know, because it's a very big position. I'm risking currently $14,000 for a max return unlimited on a $117,000 US dollar IBKR account, right? So it's a very big position. But again, we're already in profit. We're doing fine. As you can see, it's mainly holding up my account right now with 6K. Then my gold position is still 3.4K in profit, my option. My silver option is still 2K in profit. My other crude oil 3 times leverage, right, is 1,800 in profit. My other silver call position, right, is still in profit. My leverage share is still in profit. Coinbase, which I put a sell on, is now coming in profit because Bitcoin is dropping. My gold daily leverage is also still in profit. Copper daily leverage is also slightly still in profit. Battery and metals is also wisdom tree. And then I have a Bitcoin sell on Grayscale, which is also now slightly in profit. And then you can see my Palladium position is the highest one that is in profit because I entered very recently into the breakout, right? And then my leverage share lithium is also in down right now because lithium is also tanking a lot. And then I have though a hedge, right? As you can see, and that's very important. That's what I tried to explain you guys, and that's why I started to trade options, because with all of the positions I have open, okay, in silver, you can see I have a silver call, okay, which is, sorry, a silver put, which is a sell, okay. And as you can see, it wasn't minus because silver went up so much, but now my daily P&L for Friday was 1,188, and I'm still minus 34% in still 34% in minus, right? But as you can see, I am hedging, right? So if silver should really continue to just shit on me, then that's okay because I still have a put option on silver, right? Which will hedge me towards the downside, and all of the other ones are in break even, right? So here's a game plan for you guys, which I think is very important to speak about. That's not financial advice, but we are in a very risky time right now. Very, very risky when it comes to metals. If you got kicked out of the market and you lost your positions, then that's tough luck. That's just what it is, right? You just wait until there's more stability and structure. And more stability and structure, I mean by that, if you now see, for example, in silver, we keep holding this key level, which is the 50% correction level, okay? And as I already posted and marked, we don't want to break lower than this. This is the 50% correction level. That's the re-entry, right? A whole correction level of the last sequence. And it's a little bit tricky to find the sequence because you can start here, you can start here, you can start here. But what you want to do is you want to start in a major low where it really corrected. And for me, that's this one. So you can see here was a 60% correction, right? And I want to put it here. I want to put it here. And then you have another one, you have 10, and then you have another one, just 16, right? So I chose this one, as you can see, the first one, because that's the first correction after an up. And you could also go and say, okay, but I want to use this one, right? And that's the initial one that I use, and then I readjusted it. But then you could also say, okay, now if you use this one, we are sitting at a 0.786 reaction right now. Okay, so if I mark out this one, okay, if I mark out this one, this sequence, you can also see we just dipped into it, but we didn't close below it, right? So that's very, very important to understand. And I want silver to hold this level. If not, I'm also going to get a problem, because I mean, I'm not going to lose anything because all of my positions are in break even and I have a hedge position open, right? But then I'm going to get stopped out, because here you can see my entries, okay? Here you can see my silver entries, and I actually had 1 or 2 silver positions that got stopped out break even, and the palladium positions also got stopped out break even, okay? But I want this structure to hold. So what I want to happen is either this to go sideways and show a little bit of bullishness, and then I will start to re-enter, okay? But if we should drop below and we should start somewhere over here, then that's just what it is. But I want all of this wicking and all of these insane bear rates, like these big candles, right? Like these ones, the red ones, I want them to go away, or in that sense, yellow ones here in my chart, okay? I want it to be more choppy now. I want to see an accumulation phase, okay? This one, because after distribution, we want accumulation. We don't want to continue with more distribution towards the downside, or obviously if it's to the upside, then it is what it is, okay? But that's something that's important right now. What I think is a little bit more risky, and we can say, I guess not on Monday, but on Tuesday, Wednesday, how market reacts and if it stabilizes, is re-entries. Re-entries would definitely be something like this here, right? That would definitely be a logic to do, and just re-entering, because again, fundamentally and theoretically, nothing has changed in the assumption why we buy metals, in my opinion. It's just a divergence. We are very, very low. There's no reason. Okay, so that's what we want to do in, and gold is beautiful, right? Gold, you can see beautiful, more stable, more market cap. You can see we just finished the bearish sequence. We dropped onto the EMA 200. So nothing bad here. We had similar drops in the past, right? For example, I mean, percentage wise, this was a big one. But if you see this one for here, in 1 or 2 days, we dropped 6%, right? And now here in gold, and that happens, right? That's okay. Just a big one is silver, and here we dropped 12% after close. In total, obviously a stretch of 16%, right? But we have seen that in the past. Same over here, right? Here you also had a drop of top to bottom in a couple of days of 8%, and then whole bottom 11%. So it's nothing that is uncommon, right? It's just like many people are just insanely emotional. I mean, silver wise, yes, it was the biggest drop in history for sure, okay? But silver is just the smaller brother of gold, and obviously just reacts way more emotional because it doesn't have such a big market cap, okay? But if you see gold, and if you put out away all of the emotional stuff that happened, right, and the reason for it, which is complete bullshit, it's a perfect price action in gold, right? There's nothing wrong with it. We are insanely high. We finished the bearish sequence. We docked onto the EMA 200 on the H4 chart. We reflected from it. We got a lot of, and that's what we always speak about, we got a bullish candle again, a bullish spring candle, which is very positive. Same goes for silver, right? Now here it's not so much like here at least we have a positive blue body. We didn't close above. That's something I would love to see very soon, right? Is like a close above the last candle, which would basically be this here. Like I would love to see a close above this line, okay? And then the same for silver. We have a very strong candle spring over here, right? A bullish spring. It's not a good one because we're still below the EMA, but it got bought up very fast, and that's very, very interesting for us. If there would be no reaction right here, if this would just be a printed red candle, right, with a very big body, and it would have been closing here, then that would not be good. But since we have in all of the charts also here these kind of spring candles, bullish spring candles, especially here in copper, right? And copper does that very often, that it pukes like 10, 15%, 20% down. Like it happens often, right? And the same goes for palladium. We also have big drops, right? And in palladium, we still have a single print, which got finished, but also with a pretty big wick, right? So that's very interesting. And it's very similar to what happened here. I mean, it's two very different candles, but you understand the concept, right? You understand the concept. And if you go back, let's even go back in silver, which is the one that dropped the most. After these big drops, you will see some of these very similar candles, maybe not in the H4, because it was not so much liquidity, but now we are in the daily. Let's switch into the daily and look for some of these candles. I mean, they're again not as big as here, but there was a big drop obviously in 2008 that we can check out in the financial crisis, 2020, 2017. I mean, 2017, something very similar, as you can see here. And then that's what I'm speaking about, right? So that's very similar to what we have right now. We have a bearish sequence, right? And we rejected at the 100% correction, and from there we started to become bullish. We dropped later on. We finished the sequence, okay? But since all sequences are finished now, there's I mean, again, going back into silver, there is no unfinished bearish sequence so far. We could build up a new one, right? That's something we need to be aware of in the future for now, but the bearish sequence is more than finished. You can see bearish sequence target was at 94, we dropped to 73, okay? So that's good. That's good that we finished the bearish sequences, okay? Yeah, so that's my game plan, okay? My game plan is gonna be, I'm gonna very much monitor gold and silver. For gold, I think it's a pretty easy setup to re-enter, even in CFD trading and so on. In gold and silver, I don't want to do it because it's too volatile. But we need to be aware now of something, which is the 50% correction level, the whole correction level of the bearish sequence, right? So here we need to be very careful. So if price should come back, right, and we start to accept this level and bounce off it, then we might see lower levels in the future. If we break it, perfect. Then I'm just going to accumulate, re-enter, and we're going to create a new high, right? I think, though, it's going to take a little bit of time. I think what's going to happen is we're going to go into an accumulation phase now. So somewhere over here, retesting, blah, 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 maybe come up, maybe drop again, and then continue, right? But that's, again, we need to see. It can change from daily to daily, okay? So if you still want to expose in gold and silver and metals, then maybe don't buy with leverage for now if you cannot handle the heat. Because you need to understand you are very leveraged, right? Even a 3x leverage in something that moves 40% in 2 days is insane, right? It's like insane. And it's always easy when it just goes up, right? But then when we have chop or like big corrections like this, most people get completely cooked. Do anyone know where I can buy silver and gold in Germany physically? Yes, in Germany you have many places you can do that. In Germany, it's not a recommendation, I'm just going to tell you what I did. In Germany, I bought gold and silver, and I still hold gold and silver now personally at home. Maybe I should not say that, but in Dubai, who cares? But I bought it in Gran Valora, okay? Gran Valora is that's where I bought it, Gran Valora. There's many places, but Gran Valora is one of the best ones for what I know. I've done a lot of research back in the times. Why is it open? That's where you can buy physical and they can hold it for you, which I would never do. I would always keep it at home, right? Or like somewhere. Don't keep it with them, okay? But that's where I buy gold and silver here, Gran Valora, okay? For people living in Dubai, you can just go into the shops, into the gold souk and buy gold, right? But there probably is going to be a big markup, okay? But yeah, so that's one thing. You can just buy physically. You can buy without leverage. You can buy Wisdom Tree gold, silver without leverage. You can buy it with leverage, which again, you need to be a little bit more careful. But for now, since we haven't broken and respected this level, the re-entry, I'm very happy. Like, again, I'm very happy. It's crazy, but I'm happy. It's good. It hold the level. It printed a big bullish spring, especially in gold. Our oil position is doing very well. I adjusted my stop loss to break even first, and then now to a trailing stop loss. So I'm in profit. If this position would close and hit stop loss, I would still be 6% in profit or 5%, okay? But I truly believe that most likely oil is going to finish the sequence, and that's why I'm going to start to take profit somewhere over here, okay? So normally, if you speak about cycles in gold and silver, how it goes is that gold goes up, and after gold goes up, silver goes up a lot, and after silver goes up, copper goes up a lot, and after copper, oil goes up a lot, which we have here, okay? So that's normally the volume flow and the liquidity flow, okay? So now we are in oil going up a lot, which worked, right? Because I started to open gold positions initially, then silver, then copper, and palladium, for example, and so on, and then oil, right? And oil now is pumping completely. So when everything crashed, it went up a lot, right? So if you get re-entries in oil, I would definitely consider that for the future, okay? Now, another reason why it's going to be a little bit difficult for metals to recover fast, I think we could see a big recovery. It happened twice in the past. There were only 2 events in silver in the past where silver dropped more than 15%, and every time it did that, it recovered very fast and broke a new all-time high, right? So statistics is on our side, but if you speak about 10% drops, there were more than 16 drops higher than 10% in silver, and only I think 3 or 4 of them recovered right away, and all the other ones printed new lows. And after these new lows, it took 300, 280 days to create a new high, right? Since we are more on the 15% higher, and all of these 2 events in the past have rebuilt price to break a new all-time high, we have odds in our favor for silver to see a big recovery. But again, what's gonna chop it up a little bit and make it more difficult is that we are increasing very strong in the dollar now, right? Because of a new Fed chair and so on. Dollar has come into our support, has dropped below our support, which, as you guys know, we call it a bullish spring in Wyckoff method. Wyckoff method speaks especially about a spring out of the structure. So it breaks the structure, which we did. We broke the structure over here. Oh, we didn't want to move that. And that's exactly what we did, right? We broke the structure. Where's my... Too many tools here. Hey, where's my... Here. We broke the structure, as you can see, right? And we built a bullish spring. So I think there's going to be a lot of strength in the Dixie coming in. And you can also see that we just finished a bullish sequence, which I tried to catch this bullish sequence, and we dropped more, which was a shit. Like I had one of the worst CFD Forex trading weeks in my life, in my life, right? I lost 10% in Forex trading this month, right? Which was, again, I guess the worst months in my trading career in Forex, right? With like good risk management, all 1%, okay? But we took the risk, and that's okay. That happens, right? We still have 11 more months in this year to perform good. And now finally the Dixie strength is coming in, and I tend to perform very good in a strong Dixie market, especially when it comes to Forex now, moving the metals market, because we spoke extensively about it and what my game plan is. Going into the Forex market, what I'm going to look for a lot is re-entries in... let me check, and then we still have to speak about Bitcoin too, because unfortunately our Bitcoin sell got break-even stop loss break even. But let's speak about Forex quickly, what I'm going to look for this week. What's happening with my trading view again? This is insane. Trading view. So what I'm gonna look at a lot is UJ. Unfortunately, I was really unlucky this week in Forex, as you might see here. I got stopped out because of 4 pips, 2 stop losses, 4 pips. I had 2 positions. And we would have been in the initial position 160 pips in profit. In the second position we would be 133. It is what it is. Sometimes, again, luck plays a big role, obviously. I chose a little bit of a closer stop loss in the last structural low, and I still got stopped out, unfortunately, which is this one was a low. That's where I put my SL with a little bit of adjustment. So if you check the stop loss, this is the low, and I added another 5 pips, but I still got stopped out because of this candle, which is unfortunate, but that happens. You have to take that risk. If I would have put the SL1 trade, I would have been very much in profit, but I would have had a very low risk to reward, right? So this trade didn't make sense. But I'm gonna definitely look for re-entries and USD JPY, right? So if we can get a BC re-entry, and we just have to adjust the sequence because of the new printed low. So let me just adjust it. So we are here now. So USD JPY is gonna be an interesting one in my opinion. If we can print a re-entry around here, then that's what I'm gonna do, right? I'm gonna put an alarm here. So USD JPY, I'm gonna look for a re-entry in FX. Gonna put this into focus. Then we have USD CAD, where I also got stopped out once, twice, and then my test trade would have worked perfectly fine. Yeah, that would have been my entry. Test trade would have come probably to break even. We didn't take profit. But yeah, USD CAD is something I'm gonna look for. Let me just delete the volume. And let me delete, this one is the fair value zone. But yeah, USD CAD, I'm gonna look for a re-entry if we get one, and I'm pretty sure we're gonna get one. So as you can see, this sequence is finished. So then we obviously take the whole correction level. Sequence finished. So USD CAD could become interesting if we get a re-entry, which I'm pretty sure we're gonna get. So I'm also gonna put an alarm over here. So USD CAD we're gonna put in focus. Then GBP NZD, I hit a stop loss, unfortunately. So GBP NZD I'm not gonna touch for now. And then we have euro dollar, which is gonna be interesting for maybe a re-entry. As you can see, I was waiting for a re-entry, but it didn't print one, so that is okay. But euro dollar is in a bearish sequence, active, strong one, good one. So if we get a re-entry over here, euro dollar is gonna be very interesting. So this week, even though I hate saying it because I'm not emotional about it, not at all, because most traders say it and they're very emotional about it. But this upcoming week or month, at least week, I think we're gonna make a lot of money in Forex. Unfortunately, I'm gonna be traveling, so that's gonna be a little bit difficult, and I'm gonna be in a very remote area of this world. So I don't know how I'm gonna manage with internet. Hopefully, I'm not gonna miss it. Maybe I'm just gonna use limit orders. But these reversals here, if we get re-entries, they're gonna be very important. So euro dollar, euro CAD is acting up a lot. Euro CAD was the only position we took into this week, and we got a stop loss. So Euro CAD we can ignore. There's no real market structure. Euro dollar we have to put here. And then we have GBP CAD. What is GBP CAD doing? So GBP CAD, I missed the entry. Also here, if we can get a re-entry, it would be very interesting because we have an active bearish sequence, and pound should become weaker when dollar increases. So GBP CAD could be very interesting for us to trade if we get a re-entry. And I don't know if you guys remember, but in terms of DFS and DFB, we spoke about it here, that we couldn't break a new high, and he would have been the perfect re-entry on the test. And yeah, unfortunately, and we have a fair value gap, but fair value zone, sorry, this one, the red one. But yeah, we didn't, so the fair value zone is this one here, this red line, and this red line comes from the last high here. But yeah, again, now we need to re-enter BC. BC comes in with the EMA, and we are very close to the re-entry. So here we could hopefully get a re-entry. also gonna set an alarm. And then we have GU. GU, same thing. If you run the sequence, all the dollar pairs, because now we have big reversal with dollar strength, right? So this one is nearly finished. But here most likely we're gonna get a re-entry. And then, yeah, that's it. We can check NZD/USD. I mean, NZD/USD, same play over here. Just a little bit more chop because the NZD, sorry, the NZD was pretty strong. So this sequence we finished, and then we got a re-entry. So now we have to focus on this sequence over here, which is the lowest point, which is this one. Yeah. Okay, so we are also here obviously in a bearish sequence. So now we are trading this move here, yeah? Because this one's finished. Yeah. So NZD/USD we can put on focus. Let's check NZD CAT, accumulation phase, very weird price action, don't want to touch it. Euro NZD just dropping, Euro pound, trend continuation, Euro Swiss franc, trend continuation, Euro CAT, stop loss from last time, nothing. Maybe if we get a re-entry, but there's nothing here right now. Here we can use the VWAP just for re-entry check. Yeah, so it's coming with the EMA 200. So here, if we get a re-entry sell here, EuroCAD could become interesting again. Just basically this area over here, 60%, 50% correction. Do we have a BC here? Not really. But EuroCAD we could mark out, and let me move the stop loss over here so it doesn't annoy us. So this could be also an interesting, more risky entry because we don't have so much structure. We just have a distribution phase. And probably gonna see a lot of chop and accumulation here in the re-entry if we get one. But this one we can still put into focus. Euro Swiss franc, I mean, that was a very profitable trade we had from last time that closed. So nothing to do here. Let's quickly go through the ones we have here. AUD CAT is reacting, but just distribution. AUD Swiss franc, difficult because both currencies are very strong. JPY I'm not gonna touch. AUD USD obviously now also has a bearish sequence, so this one could also be very interesting for the future, where we already finished this sequence. So now we need to take the finish and the re-entry, which is leading us to this level here in Elliott wave. Very good. And then re-entry would be BC, but I don't like this candle at all. This candle here I don't like at all. So need to be careful with AUD USD because AUD is very, very, very strong, right? Very strong. But for now we can definitely move it in and see how it plays. We have Canadian dollar, Swiss franc, which is also starting to react, and we are in a re-entry, I guess. But yeah, I'm not gonna touch that. Canadian dollar, JPY, also not gonna touch that. Wait, we finished this bullish sequence, and we are starting to see. We are in correction right now, but since there is no structure, it's pretty risky in my opinion. But it could be a good swing trade. I'm gonna put it on a list, but I'm not so sure if I'm gonna trade that. Then we have Swiss franc JPY, Euro AUD. Oh, Euro AUD finally finished its bearish sequence, huh? Very interesting. And we are in a bullish one here. So Euro AUD we could, but the thing is, how much Australian dollar do we need for the euro? We need a turn in Australian dollar for this to work, but let's put it on a list and see. We have EJ, Euro is getting weaker, but this is just upwards trend. I'm not gonna trade this. GBP/AUD is still pretty far away from C target. GBP Swiss franc is reacting, but it's too low for selling. GJ, annoying, not gonna touch it. NZD Swiss franc also just going sideways. NZD JPY also nothing. So yeah, these are the ones that could be interesting, in my opinion. If we filter through it, AUD USD, Canadian dollar JPY, Euro AUD, Euro CAD, Euro dollar, GBP CAD, GBP USD, NZD USD, USD CAD, USD Swiss franc, USD JPY. So a lot of the dollar pairs, right? And again, I know that I perform good in a strong dollar and I don't perform so good in a weak dollar, which this week showed me again. So now with dollar being strong, if it holds, I know I'm going to perform very well and I'm going to ride it because I've lost 10% last month. So I need to make that back, right? And again, I'm not saying that in an emotional way where I'm like revenge trading or anything, but yeah, still need to make sure this works, right? Now, for the last 10 minutes, there's a new stock that I want you guys to focus on with me. It's a stock that I'm going to start buying tomorrow on IBKR. I'm going to open a option, a call option on this position. So I'm going to buy it. That's what I'm trying to say. And maybe I'm just going to buy the stock too. But there is a company called TACK, right? That's the ticker symbol, TACK. It's Tech Resources Limited, okay? And Tech Resources Limited, let's ask ChatGPT what it does. Tell me more about the company with the symbol TECK, Tech Resources Ltd. Okay, and you guys gonna understand why. Here's a factual variable overview of Tech Resources Limited, the company that trades under the stock symbol TACK. Overview. Tech Resources Limited is a Canadian diversified natural resources and mining company headquartered in Vancouver, British Columbia, Canada. It was formed by the amalgamation of tech and I've never heard this word, but I think it's like a fusion or together. Tech and Cominco with roots going back to 1930. Primary industry, diversified metals and mining. Headquarters, Vancouver. Public listing. Core business activities, copper. Tech is a major copper producer with significant mining assets in Canada, Chile, Peru, and the United States. Copper is increasingly vital for electrification, renewable energy, and electric vehicles, right? Zinc. Tech is one of the top global zinc producers. Zinc is the key galvanizing steel for corrosion protection and is used in batteries and alloys, right? Other metals and minerals. In addition to copper and zinc, Tech produces and sells lead, silver, molybdenum, never heard of it, and other metals, some gold exploration, previously steel making, coal. Geographically, it's an asset and operations are distributed across North, South America, particularly Canada, Chile, Peru, and the US. Financial markets, facts. These figures are based on recent financial data. Market capitalization roughly 25 to 27 billion US dollar. Revenue trailing 12 months is 7.5 billion. Analysts consensus generally buy from many brokerage through individual targets, vary dividend, modest yield, typically 1%. Merge with, and that's very important. There's a merge, corporate developments and strategy, merge with Anglo American. In 2025, Tech and London list Anglo American PLC agreed to merge to create a large copper-focused mining company. Anglo Tech, now it's called Anglo Tech, with a combined enterprise value of roughly 53 billion. Shareholder approves regularly up, so there was a merge. Why do investors watch Tech? Metal exposure, diversified footprint, strategic merge. So now we need to obviously fundamentally, for me, perfect, right? You have an exposure in copper, in zinc, in other metals. So it's not just silver, it's just in one. It's exposed in all of the metals, right? So it's gonna protect towards the downside if silver, like we just saw, drops 30-40%, right? And you guys can see we had a little bit of a drop in tech, but sometimes it's better to invest into miners and into companies because you're going to have less of this chop. Because as you can see, for example, tech dropped 12%, okay, compared to silver dropping 40%. Okay, so I'm gonna expose myself to tech. Now the problem, and now we did fundamental analysis. Now we need to do technical analysis. Okay, so how do we start? Always with the lowest, with the extremes, right? So the lowest point ever reached was touched twice. So it doesn't really matter where we start the sequence because it's always the same, but it matters for the extension. So as you can see, this is the whole build up. And as you can see, we recently touched the 50% correction level. And also what we can do is obviously find out our C target, our most probable target for this stock and outcome. So we're gonna mark it out, which is this area over here. And then we have a 1% correction level, which is a 100% correction level, which is this one. So we're just going to make this one black and P2. So now we have a sequence. Okay. Let's move this over here. Move this over here. Oh shit, I'm getting hungry. So... okay, so now we did our NXT framework analysis. We are in a bullish sequence. It's not activated yet. And it perfectly reacted here on a 50% correction level, which is obviously very nice for us to see because that means bullish confirmation. And we had a recent drop. Okay, now how do we go about the entry? Because if you just buy the stock for the next 10 years, 5 years, 3 years, it doesn't really matter so much the price. Okay, it doesn't really matter if you, because the chance is always that we're just gonna go higher, right? So the chance is that from here we're just gonna go higher, and then you are waiting for an entry, and then you might lose 40% up. But now, if we enter now to see target still 90%, which is insane, right? So there's two scenarios here. Number one is you want to wait for a logical correction, which we don't need to have, right? There's a couple of things we can do here. Again, if you're just investing and buying the stock, just buy, in my opinion. Again, no financial advice, but stock position wise, I'm just gonna buy the stock right now and that's it. Now, when we speak about trading, like options and stuff, we want to have a good entry, right? Because the entry matters a lot in options trading. Not too much, but it does. It is important. Okay, so one thing we clearly see is we have a secondary internal sequence, which is this one here, right? Which we probably finished. Yeah, exactly what I said. And again, you can see how beautiful Elliott waves with Fibonacci works in predicting the market, right? So from here we have a correction, and then a valid re-entry would be the whole correction level, which would basically be here the 50% correction level. So if we get a re-entry here, then here is where I'm going to open my options, right? For sure. So I'm going to tell you what I'm going to tell you what I'm going to do, guys. Okay, so you understand. Let me just finish analyzing it. So I'm going to use a anchored weave up just to see the overlapping re-entry. And we can see the re-entry overlaps with the EMA 200. So that's all perfect. And then I'm going to use a volume profile just to see where do we have the most orders. Okay, and you can see the biggest volume was here at 39. Okay, that here the volume is just going to show me where was the most volume. Okay, and the most volume came in sitting exactly with the EMA 200 intersection and the VWAP. VWAP is just like takes volatility and geometry into one, right? So it's basically like a moving average. Easily explained, okay? So don't get confused here. But I'm just using extra tools to confirm a good entry zone. So we had a lot of volume here. And let me actually change this color. The POC, right? The POC you might remember from time price opportunity. The POC is the place of control, right? That's where most volume was. So let's actually mark this out in blue. This is the value low. This is the value high. Let's change this to not yellow, because yellow I have red. Value high blue. No. Red. And value low also red. Red. Okay. So this is very interesting because this is the value high and this is the value low. So value high means that's where buyers stopped buying. Value high, value low. That's where, wait, value high. Yeah, that's where buyers stop buying, but it kind of opens like a new resistance or like a new support in that sense, right? Which is good because we want to see it coming back here, right? So it's a pretty good setup in my opinion. So we have strong volatility. We have the value high being 50%. We have the value low below the 0.786. Most came in here at in between 0.618, Fibonacci 0.667, Fibonacci. So my game plan is going to be number one, buying the stock. I'm going to just enter. Okay, I'm just going to buy it. Just buy the stock right now. The second entry, which is going to be a call option, I'm probably going to run 2 call options. One of them is going to be a 3 months call option, and the other one is going to be probably a 1 year call option to let this, run. And that I'm only going to do once we hit here the 50% correction. So I'm going to wait for that. If price increases, we're still going to get a re-entry in the future. I'm sure about it. I just want to have good entry in my options, but stock-wise, I don't care. Stock-wise, I'm just going to buy, okay? So that's my game plan. That's my theory about metals, Forex market. And then the last one we need to speak about is Bitcoin. But Bitcoin is doing exactly what we said it's going to do, which is finally finishing the bearish sequence for all. Perfect. Now we need to see if we get enough buys coming in to push higher. But I have a put option that is currently 10% in profit. I have 2 put options. One of them is on Bitcoin, one of them is on Coinbase. And Coinbase is going to have earnings on Monday, I think, okay? But yeah, so for BTC, I'm not touching it right now. I'm not buying here. I just want to see how structure develops. So there's not much I can tell you right now, guys. But we are seeing some interesting buys coming in. As you can see, we are bouncing off it. We have a lot of buys here at 74. Here, this we need to adjust, but we don't need that for now. So yeah, we have a lot of buys coming in at 75, 74. That's why we're bouncing off. We finished the bearish sequence again, finally, which is really, really good. And again, we said either we're going to go up. That's why we had the buy open trade to get into the re-entry, sell to go down. But with everything that happened and a stronger dollar, because of the new Fed chair announced, we just dropped into C target, which is exactly what we said. We said these are the 2 scenarios, and it perfectly went out, right? And we are in profit. And that's why you guys need to start hedging if you take trading very serious. Like if you're really managing 6-figure, 7-figure, you need to start taking hedging very serious, right? And I'm doing that. I'm hedging my silver position. So if we continue to go down, I'm still going to make money. My buy positions are all going to hit break even. Here in Bitcoin, I had a buy trade open, which was, was this one here. So we were in profit. This one was the entry. We're in profit 5%, but then stop loss break even. But then we have a put option here. So the put option now is in profit, right? It's not very big. It's not a big put option, but as you can see, BTC is now 7.2% in profit. And I'm only max loss is $360. So it's not a lot. And then my Coinbase position, where's copper, Coinbase here. My Coinbase position is 100% in profit, right? So you can see it's $862 in profit. So I made money either side. If it would have gone up, I would have made money with my trade. If it goes down as it did, I'm making money with my call option, right? So you need to learn this, guys. And that's why we spoke about options. That's why I started to trade options, because the capital is just getting insanely big and I need to play this smarter, okay? But with that being said, Type a yes in the chat if you guys understood everything in this session about the metals market, the Forex market, the crypto market, my plan for trading strength in the dollar, my plan for metals, and why all of this happens, basically, because that's important to understand. So you are ready to understand the future in trading, how cooked it actually is, right? But it is what it is. And obviously the newest stock we just spoke about, which is TEC, ticker symbol TECK, right? Which I'm looking for a re-entry. Am I still here, guys? Everything's just frozen for me. Okay, thanks a lot for the session. Blah, blah, perfect. Easy, guys. It was lovely having you. See you in the next one. And ciao, ciao.